Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that the market is currently approaching exactly the previous supply zone from which all this massive push to the downside was created. If we extend this level to the left, we can see that also previously this level was already established as a quite strong resistance and supply zone before all this push to the downside started. And what we can see is that at the moment the market is entering again into the exact same zone of resistance and supply, from which there is again the probability of seeing a potential rejection to the downside. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, we can notice that the market is currently quite strong. We can see how the bullish momentum is still intact and also the bullish trend is still intact. The market has been creating a series of higher highs and higher lows, and until the market will continue creating higher highs and higher lows, there is definitely the possibility of seeing more bullish continuation from a weekly perspective. We can also notice that since we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse level. And we can see that the market didn't even manage to create a 0.382 correction before immediately starting to push to the upside. So the market could start to become overextended to the upside. And if we dropped here down on the daily time frame, we can notice how this push to the upside is actually starting to create an overextended W formation. Now, after the creation of an overextended W, what you would naturally expect is for the market to create a correction. This is a quite common manipulation pattern. We can see, for example, here we had a massive overextended W formation. After that, the market created a rejection to the downside. And if we keep in mind that all this area up here is actually that monthly supply and resistance that we have identified at the beginning of the video, there's a good probability, in my opinion, that if the market will reach this level, we could then see a drop to the downside with the market rejecting that monthly supply and resistance and completing the overextended W formation. That definitely wouldn't surprise me. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the CAD, we can see how institutions have now started increasing again their net positions on the CAD. Now, keep in mind, all currencies on the spot are traded against the USD. So if we're looking at the data for the CAD, we're actually already looking at CAD USD. So since institutions are increasing their net positions on CAD USD, so we can see how with the last report, they have added 3,900 longs and closed 7,500 shorts. This means that institutions are longing CAD USD, therefore they are shorting USDCAD. So as institutions are shorting USDCAD, this increases the probabilities that this W formation, if the market will actually go and test that monthly supply and resistance, could then create a rejection to the downside fueled by this institutional longing of CAD USD, so shorting of USDCAD. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will continue higher and test deeply that strong supply and resistance area, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data. Those are the best time frames when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential rejection to the downside for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot the special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.